Hi everybody, my name's Zach and welcome back to the Financial Strength Project. Today we're going to be talking about wealth. What is it, how can you make it, and how can you keep it? Alright, let's get into it. So first off, let's clarify what is wealth. Is it a Lambo? Is it a jet? Is it fancy houses? Well, no. No, it's not. Wealth to me is financial security and not having to trade your time for a wage. This is then going to free up your time through the day so you can work on what you're passionate about and then find a way to monetize that. And then it'll never feel like you've had to work a day in your life. But before we jump into this, I'd ask you to maybe give this video a like, click subscribe and hit that bell notification so that you get notified of every time we put out new videos. And at the moment, I'm releasing a new video every week. Now, I'm not saying that any of this is easy or that it's going to come quickly overnight, but with a little bit of discipline, it certainly will be achievable. Let's have a look at what the average person does with their money. The average person gets paid and then they spend their money on materialistic items that they don't need. Then they wonder, where did all my money go? This trap of consumerism then repeats itself for many years, and some people unfortunately don't realise this until it's too late. Here in Australia, 50% of people are living paycheck to paycheck. Less than 30% of people in Australia would be able to survive for more than 2 months if they lost their current form of income. And in the US, it's a staggering 80% of people that are living paycheck to paycheck. So first off, you're going to need a budget. This is basically just your income minus your expenses, although to use these strategies, it's going to be important to try and live well below your means. This, of course, is going to depend on the lifestyle you want. I'm not saying don't spend that $25 a week on takeaway coffee, but in the long term, it might just make a difference. Bruh. Okay, so you've got the budget down pat and you're well on your way. That's great. Now, first off, I'm going to need you to try and save $2,000 into an emergency stash account. It's important that this is only for emergencies. So after this step, you can pay off any high interest debt like personal loans or credit card. Make sure you've got that money away first. There's no point in paying off your credit card or any high interest personal loans, because if your car breaks down and you don't have that money aside, you're going to have to go straight back into credit card debt. Now this next bit is going to be a little bit of a grind, but I want you to save 3 to 6 months worth of living expenses. The lower you can get your cost of living down by paying off those high interest debts, cancelling unnecessary subscriptions, negotiating down your phone and internet costs, all of these are going to make a difference for you. Imagine how much financial stress and anxiety you're going to alleviate from your life just by knowing that you've got 3 to 6 months worth of expenses put away in case you lose your job or a recession hits and your business isn't doing so well. This next part is where it starts to get fun. This is where we're going to look at how to invest money. That's right, I don't want you to save any more money from this point in. Once you've got 3 to 6 months worth of living expenses put aside, it's time to put that money to work and make your dollar earn you more dollars. So let's look at a few different investment strategies. We're going to look at index funds and ETFs. From there, we're going to have a look at real estate, and our last method will be dividend reinvesting. First off, index funds and ETFs. What are they? Well, basically, you get a small group of companies and stocks that are rolled into a portfolio. From there, you own a tiny slither of each of those companies in the portfolio, therefore negotiating your risk. Let's have a look at a Vanguard ETF, the Vanguard Australian Shares Index. Well, we know we'll get on average a 7% annual return when it comes to a broad market ETF like this one, which aims to track the ASX 300. So then we take 7% of return each year and reinvest the earnings each year, and that is how we get the compounding interest effect. Although this is not a get-rich overnight scheme, we've seen that historically this works. The money builds up over time and eventually you generate enough money each year to be able to sell a portion of your stock portfolio to live off and still reinvest what's left over, therefore further compounding the interest and building wealth. So let's say by the time all your bills and necessities are paid each year now that you're living below your means, that means you only need $30,000 a year to live. To achieve this, you'd need to reach $750,000. Now, I know what you're thinking. That seems like a large sum of money. But when you work with compounding effect of interest, it would only take you 20 years to achieve this if you manage to put away $350 a week into an investment earning a 7% return. If you start doing this by the time you're 25, you could retire by the time you're 45. And after withdrawing your 4%, you'd still have another 3% compounding on top of that interest, generating you more money. That in return means each year you're going to be able to sell a larger part of that portfolio, meaning you'll generate more than 30 grand a year. Now, everything has pros and cons, and that includes this method. The market does fluctuate above and below 7% at times, and I agree that $350 does seem like a large amount of money to put away each week. But if you stretched out the time frame, you could use a smaller amount of money, or would at least be able to semi-retire and maybe only need to work 2 to 3 days a week once you're 45. On to the next method, real estate. Although this is not a method that I personally use to invest my money, we know there are plenty of people who have made money from real estate. The basic principle is this. You're going to use a 10% down payment, and with a bit of research, you'll find an undervalued property to buy, which then you rent out at a price that would help this property positively cash flow. From here, you can use the equity and cash flow from that property to then rinse and repeat this method and slowly but surely build up a portfolio of real estate. Over time, the loans will be paid off by your tenants, and the hope then is that over time the property will also appreciate in value. Another option for real estate would be to buy a duplex house. You live in one side whilst renting out the other side, therefore that rent pays for the mortgage and you live cost free. From there, you're going to free up more money that's going to cash flow, which you can further invest into real estate or stocks. Our next strategy we're going to look at is the dividend reinvestment plan. Now, what exactly is a dividend? Well, a dividend is when a company that you own stocks or shares of decides to pay out part of its earnings to those who own stocks. It's basically a reward or a thank you for saying, wow, thanks for buying part of our company. The theory behind this is that if you select a diverse group of stocks paying a safe dividend percentage anywhere from 4 to 6%, you then take the dividend and reinvest it year after year whilst earning more money to chuck towards these stocks. Eventually, you're going to get to a point where the amount invested will pay enough of a dividend for you to be able to live off. The truth about wealth is, unfortunately, there is no get-rich-quick part to this. It's all going to take time and effort, and if it was easy, everybody would do this. But I have a feeling that because you're already here seeing this video and probably all these other videos down the side, you're already interested in finding a way you can use investments to make you some sort of passive income. The important thing to be able to do any of this is to live below your means. Remember to use a budget and delay gratification. Do you want to own that $50,000 or $60,000 car, or would you rather invest 50 or 60 grand into real estate or some other form of investment like stocks to make you money? It's all about finding a balance between pleasure, going to work, doing the things you want to do, and still living below your means. I hope I've helped you guys understand today how to build wealth and that it certainly is achievable. So please, once again, don't forget to like this video, subscribe to our channel, and if financial development and personal finance is something that you're interested in, please feel free to check out our channel. I'm going to leave some links below to our Instagram and also to our podcast. Also, I'll leave a link to a compound interest calculator so that you can run your own figures and see what would work for you. As always, thanks guys, and until the next one, take care.